The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman. This is, of course, the Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock until noon, right here. Love to take your calls at 877-927-6648. I usually go straight to the numbers. I discuss a bunch of things. I should discuss the Boston Museum of Fine Arts. That guy Rogers who came in from England, 12, 15 years ago, something like that, years ago. I thought, wow, this guy's just going to spin the museum to oblivion. But in fact, he's done a fantastic job. Went to that exhibition, the photographer, and it was packed. And they have these huge pictures of all these famous models and such, and all these young women walking around looking at these pictures. Anyway, let's go straight to the most important thing of the day, because, as you know, we've got the TFNN and Great Panther Silver giveaway. This is starting today. We've already had 2 winners, but we have a third winner. Right online, we've got Jack from Lakewood, Colorado, and I have to congratulate Jack right now. He's our third winner of the Great Panther Silver giveaway. And hi, Jack. How are you?
Good morning, Basil. How are you?
I'm very well, thank you. Congratulations.
Oh, thank you, ma'am. I appreciate the honor of winning.
It is an honor and perfect time to be winning silver. What can I say? A half-ounce silver bar from the Great Panther Silver and TFNN. That's a prize worth treasuring. So I do want to congratulate you, and at the same time, I'll ask you: do you have a stock that you'd like to look at? Is anything there that you're in, or you just like a little some nuance?
I've got a couple of them, but SAND is one of them.
Okay, SAND is sand. Wait, SAND. I used to have this notated, I know that. This is Sandstorm Gold Limited. Oh, this is an interesting chart. So you have a long position in it?
Not any longer, Basil. I sold it around $13 on the last run up.
To a peak F-top in the monthly chart.
For a buy point, you know.
Okay. Folks, we're looking at SAND, Sandstorm Gold Limited. It is trading at $11.53 down, 38 cents down, 3.19%. That's what happens with small stocks when they pull back. Now, what's really interesting, your sell was just perfect. That's fantastic. Congratulations. Just let me quickly do this. I'm going to do it on the weekly chart. A, B, C, D, A. Is it a B? B, C, D. So it's got 2 peak Ds on the way up in the weekly. I'm going to make a recommendation on this stock because you've had a very good winner, and I'm just going to say to you 2 things. One is I'm going to give you numbers to look at, but my sense, since you got into this so well and you got out of it so well, is that you have a very good feel for the stock. And I would not be surprised if I said to you that somewhere between $10.15 and $9.30, that's going to be a test of internal strength, both on the daily and the weekly, but more importantly, the monthly has $10.99 as support. So I'm going to recommend, and the daily, this does beautiful ChapmanWave. Look at that, A, B, C, D. Let me just do that. And the last one is a perfect A to B to C to D. Yes. Okay. I'm going to suggest that when it comes back and retests this whole area between $10.91, the low of the 20th of December, and maybe $10.67, where the 200-period exponential moving average of $10.85 is, that's the point that I would look at it. But I would only treat it as a bounce. In other words, this is one that it seems to me from the monthly chart, there's a good chance that the monthly chart is now in a sell mode. It hasn't quite confirmed it yet because both the MACD is still positive and the stochastic is at $10.90. The 9-period moving average is at $10.99. But you see the weekly chart, it looks like a rectangle formation that it really wants to come back and test the mid $10 range at $10.67. That's going to be the test, because if it closes underneath $10.67, excuse me, then we're looking at the doji candle of 957, the low of the week of the 24th of August. I wouldn't be in a rush to get back in.
Okay.
So I think you've had a great trade. Have a little patience, and I got a feeling your gut is going to say to you, "Hey, great time to get in. I'm getting in." But my eye tells me I would wait to see how it tests the whole area of that between 1080 and 1060. And if it starts to bounce, you can have a pretty nice bounce on a percentage basis. But I would raise my stop. I'd have a small position, and I'd be ready to get out real quickly. It looks to me like the downside is not yet done, especially the way the weekly chart is acting.
So you're saying the 24th of August test of what, Basil?
That the test of $10.91 was on the 20th of December. That low is the low that I'd be looking at, because if that low gets taken out, so that is 1091, because if that gets taken out, the very next level is 1067, and that's the week of November the 16th.
Okay, but you mentioned the 24th of August.
Yes, 24th of August. Wasn't that for a... let me just double check. Yeah, that... did I go back to August? I didn't remember saying August. You might be right. I just don't remember saying that because... I see what I'm talking... Yes, when I was looking at the weekly charts, I was just counting the peaks as they were moving higher. So all that I was referring to, I was just giving the wave count on the way up. So it has a beautiful doji low on the September of 2011 at $4.46 in the weekly chart. Then it goes peak A, peak B. Oh, no, that's even more. That's peak B, peak C, peak D. It goes to a peak E in the weekly, and that was at $10.19 in March of 2012. Pulls back to a low of, in May of 2012, $7.41, and then it goes peak A, B, C, D, and it goes to the final peak D at $15.43 in October of the week of October the 12th of last year. So to me, it's everything about it says that it's starting to make lower highs and lower lows. And until it really tests this area of the mid $10 range, $10.60 area, I would be very hesitant to take any long position. And even if I would take a position there, it would be thinking of it as a counter trend rally, because it appears that the weekly actually does want to go underneath $10. Okay. So I just hold off and have patience, and you've got a good eye for the stock. Let your gut tell you when you want to enter. I'm just suggesting that it's probably going to be how successful the test is of 1 point lower, somewhere around there.
All right, Basil. Thank you, Basil. Thank you so much.
That's a pleasure, and congratulations once again, Jack, as the winner of the half-ounce silver bar from Great Panther Silver and TFNN.
All right, Basil, take care of yourself.
Hope to hear you sometime soon.
All right, thank you, sir.
Thank you for calling. Let's go to Mike in New York. Hi, Mike. Mike, you there?
Did I win anything?
Yes, you won the opportunity to speak to one of your hosts on TFNN.
Okay. All right, I'm going to try and get in two quick questions here. I'm short Josby.
Oh, wonderful. That's
I want to know what do you do from here? Like what's
I tell you what I would do. Folks, we're looking at one of my favorite shorts that periodically I get just right and periodically I don't, and sometimes it's on my list. I think I even put it on my list for my subscribers the other day. One of those we were looking at to short. Did earnings come out today?
Well, they said that earnings are going to be below estimates, basically.
Oh, man. Yeah, folks, I've been talking about the stock for about 5 or 6 years. And for the last couple of years, I was saying this is one of the best stocks on the New York Stock Exchange, Joseph A. Bank Clothiers. How or why, it's impossible to tell. Although, from everything I read, they kept inventory very light and they were able to get their costs down. So they could always say things like, you buy one suit and you get 3 suits and 5 pairs of shoes and 20 ties for nothing. I don't know how they did it. But
Basil, they marked it up originally to a very high price, so it looked like you were getting a discount, but they were still making a profit on it. So
that I figured it, however it was, the bookkeeping part of it was working for them for quite a long time. One of the best stocks in the market per se. If you look at its action going all the way to the top, that was at 57.12, which I believe is a split. So it goes to a peak F top in the ChapmanWave. That's the 6th highest peak in May of 2011. I've been talking about this as one of my favorite hat trick top stocks for I don't know how long. And I look at it today, and I see it down. It was early in the morning. It was down $8 or $7 or something like that. And I'm saying, oh, no. Anyway, it's trading now at $37.70, down $8.50. And it's broken its trend line in the, let me just see. I'm going to give it a little room. It's very close to breaking its trend line of $35 in the monthly chart for the very first time. Most importantly, it made a peak C1, peak C2, double top back in 19th of October. I'm just going to say to you, sit with it. I think they're pretty much done for now. I would not be surprised if at some point in the next year we're looking at the stock and it's down in the 22s. It might even be as soon as the end of the summer. It's just the chart is really acting very poorly. Technically, there was a counter-trend rally. It's very hard in the counter-trend rallies to be able to say, this is the moment that I want to short, because in this particular instance, it actually snuck up on Friday above the 200 period moving average in the daily. And very often what it does is it goes above and it hangs around just a little longer. I wish I'd checked on the earnings announcement, because I'm sure that at least it would have been one, even if I missed it, it would have been one that was back on the list trying to get a short in, because the monthly chart said to me, hat-trick top. The implication is it's making it's made a daily top at some point. Excuse me, let me just get some water. There we are. A daily top of some significance. It's had a weekly top of even more significance. Excuse me, in this case, the peak D top back at 57.40 in the week of the 3rd of June of 2011. All it's doing is making lower highs and lower lows. And even now, the pattern's quite clear, because there is a trend line support level right. So just to give you a little bit more nitty-gritties, because when stocks drop like this so quickly, there are many people that never had a chance to short, so they're waiting to short. There are many people that are just going to try to get out. So the level to watch is $40.79. That's the 200-period moving average that was support. So my recommendation is that if it bounces towards the 40.79 area, can't hold it, starts to come back down, 35 will be the next level. Hope that helps you, Mike.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back. Dow's down 16. S&P's down 298. This is, when I talk about the psychology of the Stork Lake Formation. Every decline turns into a buying opportunity, but now we're getting closer and closer, at least to a short-term pullback. We'll talk about that a little bit more. 2 things I want to do. I had a question. What was the exhibition? What was the photographic exhibition at the Museum of Fine Arts in Boston? It's the Mario Testino exhibition. He has one with the British royal portraits, and then he also has one called In Your Face, I think it is. Huge. All of these are huge portraits. Just beautiful pictures. Very creative. Just fun. And I think museums should be both fun and serious stuff. And there's a didn't get to the new Japanese exhibit that they've got. Just there were certain things that we wanted to do, and but I will get to that. And there's a fantastic exhibit in Rhode Island at RISD, Rhode Island School of Design. And in fact, if I have a chance during the break, I might show a picture that was in the Boston Globe. It's a very interesting thing because it shows tops in all those different phases, whether it was the great cathedrals or whether it was the great paintings to illustrate the exhibitionists of the fireworks displays, etc. All right, so we'll get there. Meantime, we've got on the line Paul in Boston. Hi, Paul. How are you?
Hey, how you doing, Basil?
I'm doing well, thank you.
It's been cold up here. It's a little warmer today.
Yeah, right.
Hey, I wanted back in December, I had you look at a stock, and I wanted you to do a follow-up on it.
And that was, if I remember, Krispy Kreme donuts, right?
Yes, it was.
And you had a position in it, and I was giving you the parameters to watch, and I said I didn't know what was going on, but it was acting pretty darn well, and you had a good eye, and you had picked it up. And I said if certain things unfolded, I would be looking. I don't think at that time it was at the left side, right side price time match of $10.08. That was the July 2011 high. But I said there was it was acting very well. So in the meantime, it's at $12.90, and you still have the stock, correct?
Well, you told me to take a small position, and I wish I had taken a bigger one.
Oh, you remember? It's all coming back to me. I said, take a small position because it looks like it was going to pull back a little bit more, which I think it did. But the way it took off after that, there was that explosive move, right? So,
Seems to be.
So I looked at this just the other day because I'm trying to figure out what's going on with Krispy. Folks, we're looking at KKD. This is Krispy Kreme donuts. Some of us remember very well when it came out here on the East Coast. It was an IPO, not an IPO of the stock. There had been an IPO, but then it was going to be on the East Coast, and it hadn't been here before. And it just flopped. It was just a terrible, terrible stock. Well, why is it doing that? $12.90. Now, I don't know.
I think I may have some insight.
I'd like to hear it.
Well, they're expanding, and they're building stores in India now.
Okay, all right. So as long as they've got expansion, because as a product, from everything I read, I'm not big on donuts. I used to love the South African donuts. They were very, very different. But these are the American donuts I've never really been attracted to for some reason. But people just love them. I drive by Dunkin' Donuts. I go get my wife a coffee or something. It's incredible how many people are there. So I think there must be something going right with their business plan. So this is my recommendation. It's in a very strong leg C in the weekly chart. The anticipation is always that there should be at least a D, and then you got to be careful. There's a very strong brand new leg. I'm calling this leg C, even though it could be an alternate wave count. I won't make it complicated. But the monthly has screamed past the $12.25 200-period moving average. It went to $12.90. You've had patience. Why don't we do this? At this particular point, you've got your small position. I don't want to interfere with a small position. Mentally, what I would say to you, think of it as a brand new position that you keep your core position. I don't see any reason right now for me to say to you, just get out of that position because it's a small position and it's done very well. What I am going to say to you is the gap from about a week ago with a low of $12.35. That's on the 22nd of January, and a high on the 18th of January of $12.10. Have a little patience. Let it get back underneath 1243 towards 1243 and 1204, somewhere around there. Give me a call. Let's look at it, and then I might suggest that it's a position that you take as a different kind of position because it has a chance in the weekly chart to go above $13.12. And that to me will be a nice percentage gain, as well as I'll be able to give you a very tight stop. Have patience. If it starts to pull back, call me as soon as it goes underneath $12.50, and we'll look at it together. Okay?
Have a good week.
And thank you so much for calling, Paul. I appreciate it. Paul in Boston, a little bit warmer today than it has been. It's been freezing. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back. The Dow is up to 13,898. A relentless whack-a-mole. S&P is down 350 at 14.99. Comp-Index is up 7 at 31.57. Gold is down $1.50, 16.55. Silver's down 23 at 30.97. And Monday, January the 28th. I always forget to do that. And we've got copper up $1. Up 1 at 3.66, and crude oil is unch at 95.89. Now bonds are down 21.30 seconds. I'm going to get to bonds in a moment. I had a lot of questions over the weekend, starting on Friday night. I was at the computer just a chunk over the weekend, and so I answered a lot of questions. One question that I said I will do live on my show is RES. The question was, I've spoken a lot about the handle and cup. In other words, you get the cup and handle. It's a fairly traditional chart formation where there's a peak and then there's this descending ellipsis, this curve to the downside like a cup or a bowl, makes a low and then comes back again and stops at the left side lip. Let's call it 15. So it goes down 15 to 10, comes back again to 15. Then it pulls back again, makes a smaller little cup. It goes only a point or so, a point and a half down, and then it turns around and breaks above the previous high of 15. That's called a cup and handle. There are different ways of looking at when Bill O'Neill was talking about it the other day. He gave a number of variations. I'm going to be as strict as possible the way I like to look at it, because that formalizes a way that there's no art involved. Left side 15, right side gets to 15 or under, pulls back, and then it breaks above 15 in a short period of time without going too deep down for the handle. I've been talking about another pattern that I've noticed for years now, but I haven't put it into a categorized thing. And I've got this book of 50 or 60 different chart formations that I've been working on for years. And I've written down all the charts that meet those criteria. Well, the other one is where you get the little handle and then you get the big cup. What happens afterwards? Two things. One is it either powers right through in what I call the ChapmanWave cup and ladle. So from the left side high to the low, it just goes right through the left side high in one foul move. It doesn't stop at all. That's very powerful, and that should take you to at least a peak D. But then there's another one that it stops and it makes another cup, and that becomes an inverse head and shoulders pattern. And that's the one I've been studying in great detail. So the stock we're looking at is RPC Inc. I think this is an oil services company. Yeah, holding company for oil service and drilling. Oops, still got that cough. RES is the symbol, and it's trading at $14.64, up 9 cents. It broke out the left side high of 14.44, went to 14.43 for the little handle. Now it's making this large cup, taking it all the way from September right through to the breakout in January. And now this is what we're looking at. It is broken out in a left side, right side price time match a little bit later than it should have, but still really good, strong foundation. It's either going to, this doji candle from Friday with 14.85 high, that's going to be very important, because if it takes it out and then closes it 2 out of 3 days, high level consolidation, it says it's going even higher in this particular time frame. If in fact it reverses and it breaks under $14.16 in the next 3 to 4 trading sessions without decisively going into the 15s and holding, it says be careful. Then it's going to take quite a bit of a time out and make that other handle formation on the right side. So it looks like a soup tureen, handles on either side. That was the daily. I'm sorry, I thought that was the daily. The weekly is making a very positive, it's like a double cup formation, higher highs and higher lows. It's made a leg C. As I say, the 15s is going to be real important, and that's the same thing for the monthly chart in the cup formation. So I just wanted to explain it. It's a visual thing. You've got it. Hopefully you're able to look at it. Now, let's go to the other question that I had, which was really, pertinent question, probably one of the most important questions that we could deal with right now. And that is, obviously, what's going to happen next is probably the most pertinent question. But that's not, that's being glib. The real issue now is I'm beginning to see signals and signs. First of all, I've been talking about this for a little while, maybe a couple of months now, that I believe that the public is starting to feel convinced that they must come into the market, and even more so over the last couple of weeks. Normally that's a tip-off to say, whoa, be very careful. This is a late stage. We've seen that. You remember April a year ago? We had that, last April, I think it was, same sort of announcement, public are coming back, and then boosh, we got that fairly sharp decline. So now what I'm looking at, and this to me is going to be key, is how, when we're looking at the market itself, what leadership roles are being played at this particular point that suggests that, yes, there could be a pullback, but not a major decline. And what's suggesting that, looking out, we're going to be looking at something far greater in terms of durability, sustainability. And I have to go back to the chart that says, in the Dow formation, first of all, we've made another leg C extension today in the Dow. The S&P, it's missed it so far by a couple of cents. It's because it's the beginning of the week. It's to do it on the first day of the week is so important because it extends the weekly chart for another week before you can get a peak. That you can call a peak. In other words, because the Dow went to in the weekly chart, because it's gone to this extension, I'm calling it leg B. That means it hasn't made a peak B for this week. It cannot make a peak B. Only next week can it have a lower high bar. Even if from this very minute on, if for the rest of the week it goes down, you can't call it a peak B until there's another bar, another weekly bar that has a lower high. But the stochastic's at 95%, and the MACD is still expanding. So far, I just have to give the weight of evidence to say I'm anticipating some kind of a pullback. It could be a 3 to a 5, maybe a 7-day pullback. And I'm calling it a pullback. Why? Because the Dow is showing tremendous strength. It's right at resistance, dashed line resistance in the weekly. The monthly chart, I've got a couple of days to go until Thursday before the end of the month. I have to call this leg C. There's nothing here yet, unless there's a tremendous decline going into Thursday's close. And then Friday to Monday sees 150 to 250 points down on the Dow. Then I'm going to say, maybe it's the alternate leg G. But at this point, I have to call it leg C, and it's very positive. It says that I cannot get a peak D until peak C is made. And if in February, even if it's the first day of February, Friday, and it squeaks to a new high by 1 penny, I cannot get a peak D for 2 months later. So at this point, no new high bar in February. The ChapmanWave says peak C, expect leg D up in probably March. A dip into middle of February, and then it starts going higher. March starts the next leg up, and that'll be leg D. Okay? S&P, pretty much the same thing. So now, what am I looking for? I'm looking at all these different, my Dow quartet, leading Dow stocks. What am I looking at? I'm looking at GE, which is doing so nicely. This leg C in the daily. The weekly is only in a counter trend rally, and the monthly is the same thing, but it has 2360 as a 200-period exponential moving average target. That's only a point and a quarter away from here, but so far it's acting very well. I wouldn't call it leadership, but I would say excellent action. IBM had a spectacular move. It's in this U shape that makes a soft W formation, very familiar pattern. It says that IBM could in fact make new highs, but it's really stuck in a trading range for now, and that trading range is defined between the previous high of 211.79. So I would say 215 on the upside, with tremendous support at about 192 on the downside so far. That's the way it's looking. Triple M broke out to all-time highs. This is looking fabulous. Leg B in the daily. There's no other way that I can count this. And leg C in the weekly, so still looking very positive. And the monthly is breaking out to new highs. Leadership role, UTX, one of my pilot light stock. Leg D up in the daily, fabulous move. Leg E, I've got in the weekly. I don't like discrepancies between these different charts, but that's what I'm calling right now. And monthly has to take out 91.83, the previous all-time high, but it's acting very well so far. So the Dow quartet is saying nice action. Now the question in the den was bonds. This is, to me, absolutely key. I've been talking about the arch formation. And in fact, it looks a little bit like the GLD gold chart. 132.21 was the high, all-time high, in the TLT, and that was the week of the 27th of July of last year. Pulls back sharply to about 117, I think it was 118.05. And then it has a bit of a bounce, goes to peak A, pulls back, doesn't break the left side low, and it goes to B, and then it turns down, and it makes the H that becomes an M formation in the ChapmanWave methodology. Breaks to a low, goes to trough C, and today it started leg D down. Stochastic is just getting to an area where it could have a bit of a rally. The MACD is still weak in the weekly chart, but the monthly charts, those are the ones that this has been worrying me terribly, and I still have the alternate wave count, but everything about it says it's almost certain that was a peak D at 132.21. I don't want to go into the technicals, but I have a little more time later in the week. I'll go into it, why that's not a C and it's probably a D. But in the meantime, the MACD is cross negative. So I'm in a sell signal on the monthly chart of the TLT. The stochastic says 61. If it closes the month underneath the 9-period moving average of 121.62, I go to a sell mode in the monthly chart of the TLT. That ain't good, but it is good for stocks, and that's the reason why at this particular point I believe the weight of the evidence says that we've got a 6 to 8 week, even with a pullback coming up, we've got about a 6 to 8 week rally in the stock market going to probably March. I don't know yet because I have to wait for Friday or Monday. I have to wait to see if there's going to be a new high in the monthly chart for both the S&P and the Dow. But so far, it is absolutely saying that there's the likelihood of people finally taking money out of bonds and putting it into the stock market is really high. Look what happened when they did it en masse. Even my good friend who had a fantastic, not a trade, but a position play in Apple, and then listened to everybody, took his money out at 680, and then got back in at 548 or something like that. He was forced by what he heard and what people were telling him to go back in. And then he put in a stop, 505, I think, for somewhere around there. But he got back in. He could have got out with a bit of a profit. He never got out of the profit. And he's stuck in a losing position. So it should have been, I sent him a text saying, darn, what should have been a short-term trade is going to become a marriage. Be careful. And he's a businessman, so he doesn't get to watch stocks all the time. But he took a beautiful trade, a lot of money that he made, and he gave it up by being a sheep. And he admitted, he said, I knew I was always doing it. I said, why are you doing this? I said, everybody tells me. And he listened. So that's what happens. The public gets in. And look at that doji candle, the tiniest little candle right at the top, the week of the 21st of September. So that says, peak D, doji high, 705.07, fading technicals as the stochastic was lower, the unbalanced volume turned around, the MACD turned around. The MACD was way lower at that high than it was at the previous high of 644 round number, the week of the 13th of April of 2012. Now look at it. This is leg C, probably trough C for now. It's going to bounce a little bit. It can bounce. Sure, it can bounce. Maybe 490, even 500. At some point, it's coming back to test the 391 level of the 200-period exponential moving average, and that's when the public, that the public were getting in there, all the people that missed. I'll never forget. I was getting a checkup, some X-rays. I don't remember what it was, at one of the hospitals here in Boston. Way back last year sometime, was it? And there was the nurse who was doing most of the stuff says, I don't know how it came about. She was talking about something. Oh, Apple was just starting to really pick up steam. And she said, I've had Apple for years. And she said it was at 500. I remember exactly. And she said, I'm never going to sell this. And then it went to 705. And I'm thinking, wow, that's fantastic. Bravo. Now it's at 452. I wonder if she still has it. That's what happens. You can't marry stocks. You can think about it, and you can stay in long-term positions. You can have a buy and hold Rip Van Winkle, but at some point you've got to make an assessment to say, wow, that exponential rally in that last right arm extension in both the monthly and the weekly charts to the 705.07 high, peak E in the monthly chart, that was a tip-off. You got to be careful. So, needed to cover that only in terms of sentiment. Then we're going to talk about, so I covered the, you know what, in the next segment that we have, I'm going to do all of it because it's the beginning of the week. I'm going to go right from the VIX through to the Euro, to the USD, JPY, to copper, to the works. I'll be right back here. Basil Chapman, Tiger Technicians Hour. Dow's down only 2. S&P's only down 90 cents. What a market.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. So now the Dow's down 1, S&P's down 0.54. So in my opening call, that's my service that goes out to subscribers. Oh, today I don't know how many charts. Must have been 11 charts that I sent out because I want to show the charts of what we have. I show charts for subscribers who might be looking at something and just want a general feel for what it is. I'll add it if I think there's a learning experience there, even though we might not have a position. And of course, I always show the Dow charts, etc., etc., etc. But most importantly is that we have 6 longs. I'm trying to set up some shorts if they come to me. I'm not gonna just jump in on anything that I think should be shorted. It has to shout out, "Hey, I'm weak, short me." That's the way it has to be. But in terms of the indexes, I have a methodology subscribers know about. When we get to a certain peak in the Dow, I invariably put on a short position. It's just the way it is, and it's coming up. It should happen very soon. The volatility index is a 13.54. It's rising. It's made in the 120-minute chart. It's in leg C, maybe peak C. But the only time that it's really going to kick this market down is when it breaks above 15.93 and fills that gap between 15.93 and 17.88. And the S&P is still not 1503.26. It's missed it by 4 cents, making a new recovery high today so far. For my subscribers, I've drawn the Dow, the diamonds chart, what I was expecting, exactly how I'm expecting of the next couple of days, what should happen. In the long-term charts, I just wanted to show that we're in leg D in the yields. The 30-year T-bond yield, there it is, leg D. This is the shortest leg D we've had, not in time, but shortest in price, from the low to the high, I believe, 26.94 to 34.90. So just real quickly, that's 18. So this is 24 to 31. Yeah. So this is the shortest we've had. That I'll put the whole thing together. So it's leg D in the 30-year, leg D in the 10-year, and leg D in the 5-year yields. So this is the opposite of the core itself. This is the actual Treasury bond yield rates. Well, actually, those are notes and yield. And this one right here is a Treasury bond, and these are notes. So that's going to be important to me. Why? This is what I'm looking at. The VIX is still very, very low, but it's getting a little anxious. I think Steve had mentioned, it's getting a little antsy here. So that says to me, just be a little bit careful. In the Dow itself, INDU, we're only in leg C. So INDU. Am I going to type that correctly? INDU. 2 fingers. There we go. And there's a potential doji here. I'm getting some signals that say this is fantastic at 95% in the stochastic, and the MACD is very strong in the daily. Weekly has just gone to 95%. All of this is very positive. On a very short-term basis, I have one particular indicator, and it's saying, be careful. There could be a sudden pullback to the 13,700s, maybe 13,647 area. That will be the test of whether there's internal strength or there's weakness. The S&P SPX.X, same thing. It's almost at a leg C extension. Otherwise, it's making peak C if there's no new high today. It's missing it so far about 3-4 cents. But the weekly chart is very strong. It has tremendous resistance at the 1518 level on the cash S&P. Leg C in the monthly. The Qs 1 to 3. The Qs 1 to 3 are actually acting very well. I mean, they're up at 67.35, and that speaks to inside strength, and it speaks to Apple. This is the bounce in Apple that I was talking about earlier on. It's unfolding right now. IWM is it was a little weaker. No, it's extending leg D. So all of this is saying to me, so far, so good. This is very good action, but there are big gaps that we've got to look at. EUR, as we go, Larry Pesavento is coming out for Stay Tuned, because it should be a fantastic show with Larry. And the euro is in peak C unless there's a new high today. And the USD JPY, the dollar yen currency, is also in leg D. So we're getting very close to some kind of a pullback. We'll be watching this closely. My service is the opening call. I'll be back tomorrow. Have a great day. Stay tuned for Larry and all the other hosts at TFNN.
Are you